Welcome back to Investing Talk Podcast.
Today we are pointing our telescope at something that feels a little bit like science fiction, but is actually trading on the NASDAQ right now.
And what's that?
We are talking about AST SpaceMobile.
Mm-hmm.
And before you scroll past thinking, oh, another satellite company, let me just stop you.
Okay.
This isn't about beaming internet to a dish on your roof.
Mm-hmm.
This is the only pure play on direct-to-device 5G connectivity.
Meaning what exactly?
Meaning space internet directly to the phone that's already in your pocket with absolutely zero special hardware needed.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really, really helps the algorithm find us.
So we have to set the stage here. We are looking at a company that just reported revenue growth of over, 1,239% in Q3 2025.
Wow.
And they're targeting a market of 6 billion underserved mobile users. Basically, anyone who has ever looked at their phone and seen no service.
Okay, let's unpack this immediately because while those numbers sound incredible on a headline, my skeptic radar is pinging.
I figured it would be.
Yes. 1,200% growth sounds amazing, but we have to be real about the base effect here. I mean, if you make $10 one year and $100 the next, you're a growth genius percentage-wise.
Sure, but you still can't buy a coffee.
Exactly. This company is still unprofitable. They are burning cash to build this thing out, and they're trading at a price-to-sales ratio of 1,424.
1,424. I know, it sounds absolutely astronomical.
It's not just astronomical. It's priced for absolute perfection. To put that into perspective for everyone listening, a healthy, high-growth software company might trade at, 10 or 20 times sales?
Maybe 30 on a good day.
Right. NVIDIA, at the absolute height of the AI frenzy, was around 40 times sales. People are paying over $1,400 for every single dollar of sales this company currently generates.
So the question is simple.
Yeah, the question for this deep dive is, can AST SpaceMobile actually deliver on its promise to turn over $1 billion in partner commitments into reality in the second half of this year, 2026?
Or is that recent 23% drop in the stock a warning sign that reality is finally kicking in?
That's the billion-dollar question.
And to answer it, we have to look at the fundamentals first. You mentioned the valuation, which is fair, but you have to look at the trajectory. That 1,200+% growth in Q3 wasn't an accident. It marks the transition from, let's call it, science project to commercial business.
Okay.
Management is forecasting $50 to $75 million in revenue for the second half of this year alone.
But forecasts are not cash. You can't pay your engineers with forecasts. And right now, they are spending heavily to build out this network.
They are, but that spend is an investment in what could be, a monopoly-like asset. They aren't just hoping for customers.
Right.
They have over $1 billion in commercial revenue commitments locked in. These aren't handshakes. These are commitments from the biggest players in telecom.
So what's happening on the ground? Hitting their stride is a generous way to put it. Let's look at the production reality. What is actually coming out of the factory?
Okay, let's look at the hard data. They've scaled production to 6 satellites per month.
6 a month.
Yep, they're operating out of 500,000 square feet of facilities. This isn't a garage startup anymore. Their target is to have 45 to 60 satellite launches by the end of 2026.
If they hit that, they have a global network.
Exactly.
If they hit that, space is hard. Manufacturing at that speed is harder.
Yeah.
But I want to pause on the technology itself because that's the core of the bull argument.
It really is.
You said direct-to-device. How does that actually work? What makes them so special compared to, say, Starlink?
This is the critical aha moment. This is their moat. If you want Starlink, you need a terminal.
Right, that pizza box thing.
That pizza box thing. You need power. You need to set it up. AST SpaceMobile connects to the unmodified smartphone you already own.
But wait, explain the physics of that. My phone has a tiny antenna designed to talk to a cell tower, maybe a couple miles away. How on earth does it talk to a satellite going 17,000 miles an hour, 300 miles up?
That is exactly why this is so hard and why they have 3,800 patents. It's not about your phone shouting louder. It's about the satellite having incredibly sensitive ears.
Okay.
Their Bluebird satellites unfold into these massive phased arrays. Think of a flat panel, roughly the size of a tennis court floating in space.
A tennis court. in space.
Roughly, yeah. It acts as a massive flying cell tower because the antenna array is so huge it can pick up the faint whisper of a signal from your standard iPhone or Samsung.
So it's all in the satellite.
It's all on the satellite. It uses beamforming tech to focus directly on users. It's vertical integration at its finest. 95% of the tech is made in-house. And because of that patent wall, they've signed up the heavy hitters.
Well, who are we talking about?
AT&T, Verizon, Vodafone, Rakuten, American Tower, BCE. In total, more than 35 mobile operators are signed on.
That list of names is the only thing keeping me from dismissing this valuation entirely.
Yeah.
AT&T and Verizon don't usually sign partnerships with vaporware.
They need this.
They do. Building towers in the middle of nowhere is impossible, but, and this is a big but, I'm taking a wait-and-see attitude on the beta service coming up in the first half of this year with AT&T.
It has to work.
It has to work perfectly.
Yeah.
If there are drop calls, lag, anything,
Yeah.
that hype train is going to derail fast.
That's a fair concern. Execution is everything now. But let's see if the price action matches the promises. Let's move on to the charts.
All right, let's run the numbers. If you've been holding this stock for a while, you are incredibly happy. We are talking about a 243.9% return over the last year.
Incredible.
Over 5 years, you're up 346.3%.
Yeah.
Those are life-changing returns for the early believers.
It's been an absolute rocket ship.
But rockets shake violently on the way up. The volatility here is nauseating. Just in the last 7 days, as of early February, the stock has dropped 23.6%.
A huge drop.
And over the last 30 days, it's down 4.3%. That shakes people out.
Right. And that's terrifying for a new investor who just bought the top. But you have to zoom out. After the massive gains in 2025, where it went up over 240%, we are just seeing a consolidation phase.
The market catching its breath.
Exactly. The question is this a breather before the next leg up, or is this the top?
Well, volume usually tells the story. What are the big fish doing?
This is where it gets really interesting. The smart money, the institutional investors, they are buying.
Heavily.
In the last 12 months, we tracked 341 institutional buyers, adding a total of $2.04 billion to their positions.
$2 billion. That is serious conviction. That's not retail traders on Reddit. That's pension funds, asset managers.
Exactly. And compare that to the sellers. Only 113 institutions sold, and they only took out about $325 million.
So a massive net inflow.
Huge. For every dollar leaving the stock from institutions, nearly $7 are coming in.
What does that tell you?
To me, that says the institutions are ignoring this short-term volatility. They are looking at the 2026 roadmap, the commercialization, and they are betting on execution.
They're not worried about a 23% dip.
They're worried about missing the next 1,000% gain.
Or, playing devil's advocate, they are chasing momentum. We've seen sector-wide moves in space stocks recently. And, there are rumors swirling about SpaceX.
The rising tide?
A rising tide lifts all boats, even the leaky ones. The volatility is partly fueled by these rumors.
That's a perfect bridge to sentiment. The charts are messy, but what is the street actually saying about all this?
The overall score right now is neutral, but with these really strong bullish undercurrents, it's a weird mix.
How so?
You have headlines like, is AST SpaceMobile still attractive after volatile share price swings? Which is basically the market shrugging its shoulders.
Right. And then you have headlines like, AST SpaceMobile stock swings as investors weigh SpaceX IPO rumors.
That's the elephant in the room, SpaceX. And it's a complicated relationship, isn't it?
It's extremely complicated. It's a frenemy situation.
Explain that.
Well, AST SpaceMobile relies on SpaceX rockets to get their satellites into orbit. But at the same time, SpaceX's Starlink is trying to develop its own direct-to-cell capability.
So AST is paying their biggest competitor to launch the satellites that are designed to beat them.
Exactly.
Which is a precarious position to be in. And the market senses that tension. We also saw the launch of the ASTN ETF.
Ah, yes, the 2X short ETF.
The Defiance Daily Target 2X Short AST SpaceMobile ETF. For those who don't know, a short ETF is a fund designed to go up when the stock goes down.
And a 2X means it's leveraged. So if ASTS drops 10%, this ETF goes up 20%.
The fact that this product even exists is telling. You don't build a complex derivative like this for a penny stock nobody cares about.
No, it means there's a real battleground. Enough people are betting against the company to justify Wall Street building a product for them.
The battleground is definitely heating up.
It does. But let's talk about that SpaceX IPO factor you mentioned.
Yeah, the rumor mill is spinning that SpaceX might spin off Starlink or go public itself. That sucks all the oxygen out of the room.
How so?
If you're a generalist investor looking for space exposure and SpaceX becomes an option, do you stick with the risky 1400x PS company? Or do you go with Elon Musk?
I get that logic, but I think it misses the nuance. You have to look at the bull case theory. There's a reason ASTS shares touched $121.23 recently.
What's that reason?
AST SpaceMobile has a very specific niche. It's a B2B wholesale model. They aren't trying to sell subscriptions to you or me.
They're selling to the carriers.
They are selling capacity to AT&T and Verizon. That is fundamentally different from Starlink's direct-consumer model. They aren't necessarily competitors in that sense.
That's the bull argument. But the market sentiment is fragile. Despite that $2 billion institutional inflow, the mood shifts with every headline. It feels like everyone is holding their breath.
Which makes sense. But okay, let's look at what could go wrong. We can't just drink the Kool-Aid. We need to look at the bear case.
Exactly. Let's look at the dangers. And for me, risk number one is execution. Pure and simple.
It's the sheer scale of it, right?
It's the math on the calendar. They are targeting 45 to 60 launches by the end of 2026. That is incredibly aggressive.
It is.
We are in February. They need 5 orbital launches by the end of Q1 2026. That's literally next month.
5 birds in the air in the next few weeks.
And if they slip, the stock gets punished. We've seen it before. Space is delay-prone. Weather, rockets, glitches. Any slip here pushes back revenue.
And that leads right to the financial risk. Can you explain the CapEx situation?
Sure. CapEx, capital expenditures, is the money they spend on physical stuff, building satellites, factories, ground stations. Their free cash flow is negative because they're pouring every dollar into this CapEx.
So if a rocket launch is delayed...
If revenue gets delayed, they are still burning that cash without bringing any in. That's the death spiral risk.
The what?
If they run low on cash, they have to sell more stock to raise money, which dilutes current shareholders, which drops the stock price, which makes it harder to raise more money.
It's a vicious cycle. And then there is the valuation again.
I'm sorry to keep harping on it, but 1,424x price to sales means the stock is priced for perfection. If they execute 90%, well, an A-, the stock could still drop 50% just to normalize.
The market is expecting an A-plus performance. No room for error. And we can't ignore risk number 3, competition.
Starlink.
The elephant. And the launch of that short ETF shows there are traders actively betting on ASTS failing, or Starlink just crushing them. Starlink is moving fast to add direct-to-cell too.
Exactly. ASTS had the first mover advantage on the tech, but Musk has the launch capability. He owns the rockets. ASTS has to run space on them. That's a massive strategic vulnerability.
It is. But let's look at the calendar. How do we invalidate this bear case? What are we watching in the next 3 months?
Well, first up is the Bluebird 7 launch. It's scheduled for this month, February 2026, on the New Glenn rocket. That is critical. Okay, what's next?
Then we have Q4 earnings coming up. Everyone is going to be listening to that call, not for the revenue numbers, we know those are small, but for the launch progress.
What's the specific goal?
The goal is 3+ launches by March to establish intermittent national coverage.
Intermittent national coverage. That's the milestone. If they hit that, the proof of concept is done. It becomes an expansion game, not a does the physics work game.
So we've looked at the massive potential, terrifying valuation, the institutional buying, and the execution risks. It's time for the verdict.
All right, give it to me. We have a company burning cash, trading at 1,400 times sales, relying on a competitor for launches, but holding the keys to the holy grail of telecom. What's the score?
I'm giving this a bullish score of 8 out of 10.
8 out of 10. Even with the valuation concerns. That's bold.
It is, but hear me out on the thesis. The combination of strong institutional flow over $2 billion, plus that massive moat of 3,800 patents, plus the locked-in partnerships with AT&T and Verizon, it outweighs the execution risks for me. You're betting on the partners.
I'm betting on the partners in the physics. The Bluebird satellites provide efficiency competitors can't easily match. Each one covers about 300,000 square miles.
They don't need a mega constellation.
They don't need 40,000 satellites like Starlink. They need a few hundred. That capital efficiency matters.
So what's the play?
The horizon is a multi-year hold. You have to look past the weekly volatility and hold into the second half of 2026 when commercialization really starts turning on the cash spigot.
And volatility.
Expect it. It's going to be a bumpy ride. But the dip we are seeing right now, that 23% drop, that offers an entry point for the brave.
High risk, massive reward. That seems to be the story here. If they pull it off, they change how the world communicates. If they fail, it's a very expensive fireworks show.
And with $2 billion of smart money behind them, I think the odds are in their favor.
Well, there you have it. The race for space is heating up, and ASTS is right in the middle of it.
If you enjoyed this breakdown, make sure to subscribe, like, and comment. Let us know. Are you buying the dip or staying safely on Earth? See you in the next one.